unless there's some new news, I will probably continue to buy the dips. All right, welcome to Talking Investing. I am Tom. This is not financial advice. We're here to talk about all things investing, and today I want to talk about a company called Workhorse, stock ticker WKHS, and this is a follow-up video to a video I made about a month ago, and I called that video Radio Silence. I felt like investors were in the dark and we had not really heard what was really going on from management. They are no longer radio silent, so I want to go through the news, go through their quarterly earnings call, talk about what the real issue behind the scenes was. It's a real problem, but it's fixable. And then talk about their sales backlog. Then we'll take a quick look at the chart. I want to show you what some of the analysts think, and we'll talk price target. Okay, this is an article, and I'm not going to read the whole article. You get the gist from the headline. Failure to launch. Workhorse Group ousts CEO as production delays escalate. Now, I talked a lot about production delays in my last video. I want to show you just a 10 or 15 second clip from that video, and then we'll talk about what's really going on. They've had a lot of delays in production, and you can see to this day, if you add it all up, that means they're maybe at 50 or 60 vehicles produced ever. They have the facilities to do it. They have massive facilities. They're set up to go. Something's gone wrong with their production. Something's wrong. We don't know what it is, and they're not telling us. We now have a new CEO, and they just did their quarterly conference call. Although some of the news wasn't good, I think it was reality. So it was a nice reality check. As an investor, it made me feel better. The price of the stock is getting beat up because, some of the news was not good. Identifying their problem was key. If they can solve their problems, which I think they can, we may be able to see a big upswing in this stock. So it's all contingent on them solving their problems in a timely manner. All right, so this is management's commentary from their quarterly earnings call. So they have a new CEO, Rick Dauch, and he got up and said a few words. Now, he's only been there a few weeks, and, he admits that, but he's been associated with the company for longer than that, and he's been in the EV sector for even much longer than that. So I just want to read one paragraph of what he said because I think it's very important. It's really the whole issue, in my opinion. Rick Dauch says, I joined Workhorse because of their leadership position in last-mile delivery technologies, the nearly 8,000 diverse customer order backlog confirmed with standard vehicle purchase agreements that include typical terms and conditions. That's the first part of what he said. So he hit on a few key things. They've got 8,000 legit orders. He said he's reached out to most of those larger customers. They're still on board. And you'll see their sales have been anemic. I think they sold, like 30 vehicles in this quarter. So very close to zero. So to be staring at a backlog of 8,000 orders can be a great thing if they can get to the point where they can deliver them. What is clear from the initial customer feedback is that we need to further increase the payload capacity of our vehicles. Payload. This is their problem. So what they talked about in the conference call, the bottom line is the vehicles run great, and he even mentioned, if we're delivering bread or donuts, it's not a problem. Their problem is they can't quite hold the payload that they were hoping for and that their customers were hoping for. So they've got to go back to the drawing board, and this is not a start from scratch situation. These vehicles run fine. They are delivering things right now. The payload capacity is less than it needs to be for the majority of their customers. Basically, what the CEO has said, I think this is the appropriate thing to do. He's not giving any guidance for the next 90 days. So he said, listen, I just got here. We've identified the problem. We are going to work on fixing the problem. I'm not going to try to give you sales estimates and time frames. He said, give me 90 days. And at the next quarterly conference call, I will be giving you all of those updates. I'd rather hear that he doesn't know than have him make something up or say things like they have in the past, which is, we have supply chain issues and, generic responses. That as an investor in your gut, that's not really what's going on. We have found out what's going on. They got to increase the capacity of their payload for these automobiles, the C1000, which is their flagship vehicle. They're working, he said they have reached out to their suppliers and they are working together. He feels the problem is very manageable and very fixable. So we are going to know in relatively short order, if not sooner than at the next conference call. I would expect a big update that talks about the progress on these issues. So I won't even bother to go through their financial results. Needless to say, they were not good, which was a surprise to nobody. They sold almost nothing, and they really have put things on hold. Behind the scenes, they have been on hold for a while trying to address this payload issue. Let's just take a quick look at the chart. All right, this is a real short-term view of the chart. This is from April to the present. Today is August 11th, 2021. I've drawn just a couple of lines on here. I will tell you, in my last video, the stock was hanging out right around support. As an aside, please smash the like button, subscribe to the channel, and hit the notification bell so you never miss a video. It's broken below that. Since the quarterly earnings report where they've disclosed their issues, the stock naturally has taken a hit. So it's now really below the trading range that it's been in. So typically that would concern me. A breakout to the lower side would be concerning that we're trending lower and we're going to keep going lower. I believe this is just a reaction to the earnings call, a reaction to this new information. I think the market is digesting this. So it's the middle of trading day today, and the stock is now at $9.80, down 4.58% on the day. So another not very good day. It's trended down from over $12 a month ago to now under $10. So we can see right here, basically, this has broken out below the recent trading range that it has been in. What I would like to see is for it to pop back up into that range. I don't know how long that's going to take. I'm not expecting this to continue to dive downwards. However, my takeaway from that conference call was positive. I'm going to break away from the chart for a second because I'd like to show you something, because I think the financial world agreed. Here's a list of analysts that weighed in on this stock after the previous conference call. So we're looking at 3 analysts. They all say hold, hold, hold. 2 don't even give a price target, and 1 gives a price target of $8.50. And at the time, the stock was trading much, much higher than that. Now I want to show you what the analysts did after this most recent conference call. Okay, you'll see 2 analysts have come out over the last few days, one on August 9th and one on August 10th, and they both have a buy, one with an $18 price target and one with a $14 price target. Now, we just saw they're trading at $9.80 right now. These are 2 very positive outlooks. So the 2 analysts that felt they had enough information to even make a call both came out and said buy. You can take these analysts with whatever grain of salt you want to. I don't rely heavily on what the analysts have to say, but I do think it's noteworthy that everybody went from a hold to a buy, even though the news was not good. I think flushing the news out and getting to the core of the problem has started to rebuild some confidence in this company. So in the short term, again, I'm still looking at, it's at $9.83 now as we're speaking. I'm still looking at somewhere around this $11 range and this $18.60 range. So call it $11 to $18. There seems to be a trading range in there, but let's zoom out and take a look at the big picture. This is their chart for the last year. So this is a little bigger picture. There's a few new lines on here that I want to talk about. Somewhere in February, this thing just straight tanked. And that was the day that it was announced that they were not awarded the United States Postal Service contract. So I thought it was highly notable that the new CEO, Rick Dowk, did not even mention the USPS contract while he was talking. Now, there was a question in the question and answer section, and somebody asked him a question about it. He basically said, we have no comment. I'm much more comfortable with that position. To have a quarterly call and talk about all the things they can do versus obsessing over the one thing that it seems like they probably can't do was a much healthier stance. So that is another thing that I think really instilled confidence in the marketplace. So I've drawn two yellow lines, one at about $31 right here, and one at $43 right here. $43 is their all-time high. Sure, it could, if things turn around over the next few years, there's no reason they can't get back to that point or beyond. But in the short term, that's not even a line that I am looking at. I am looking at this $31 line. This was where they were at when the news hit that they're not getting the contract. So you can see they fell 60% in one day, essentially, when the news came out that they lost that contract. So whereas it was an overreaction to the upside to get up to 43, I feel like maybe it was an overreaction to the downside for a 60% down in one day just based on one contract. Since then, they've basically traded sideways, and you can see they got themselves, starting right here, they got themselves into this trading range that we talked about. So in between, the $11 and $18 point. Now, they're below that right now. I understand that. So this seems like a very good entry point from a buy and hold standpoint. So for me, this is falling into a buy and hold. I think this company has a massive amount of potential. They have one big problem, and it's not the EV portion of what they do. So this is an EV company, and they've got that part nailed. They just need to work on their payload capacity. So that seems like an extremely fixable problem. If they can do that, they've got 8 million miles already driven by their vehicles. So it's a tried and true product. They also have another segment to this business which deals with drones. I'm not going to get into that in this video. Hopefully, if things go well with Workhorse, I will be doing another video and we'll talk about that segment, because that is an exciting, big opportunity to grow the business as well. So I'm looking to buy in somewhere here under $10. If it keeps going down from here, unless there's news that would give me a reason to change my opinion, I will probably continue to buy the dips and hold and look for this to get back to, for starters, to get back to $20, which I think is a more natural place for this stock to be, and then see if it can work itself up over the long term back to the $30 and then the $43 price point that it was at, just 8 months ago. So those are my updated thoughts on Workhorse. Thank you so much for watching the video, and we will see you in the next one.